Okay, good evening, everybody. Let's go ahead and get started. Let me know if you guys can hear my audio and see my screen in the chat box. Just give me a little Y or a yes there. Hope everybody's doing well today. I was going to say, hopefully trading's been good. I guess it's been good and bad, right? We had we'll talk about the dollar yen and how that all turned out and what happened. But now we're moving forward. Got some good stuff happening too. And so I'm excited to talk about those changes and some good things have already started. So I'm pretty excited about that. Let's go ahead and as we get started here, I do need to share a quick disclaimer just before we get into any trading. So as always, just kind of remind you guys about the risks involved in the market. You can lose all or more than your initial investment if you're not careful. And so that means knowing how many pips you're risking on each trade and how big your lot size is, and ultimately how that would affect your account if you were to lose money. And so you got to know that every single time, because we have winners, we have losers. When we lose, we got to know how much that loss is going to be so that we don't ever exceed a threshold that would put us in a financial situation that wouldn't be good, right? So that's important to know every single time. All right, guys. So also just want to welcome anybody new with us. I do see a few new faces. Excited to have you guys here and welcome you to the program. But yeah, we got a lot of fun stuff to talk about tonight. So tonight is COT report night. So we'll talk about the COT report in relation to the trades that we're in, and also just a market update, just talking about in general, where the market's been and some of the changes that we've seen recently, because there has been a lot. Well, awesome, guys. So let's do this. Let's do this. We'll start and end with the same thing. What I want to do is I want to start by talking about what trades we're in right now, to make sure you guys are in the same trades. And we'll end with, wrapping up on the trades that we're on and more detail as to why we're in those trades. And then in the middle, we'll talk about, the COT report, what changed with the dollar this week, and those kinds of things. So take a look. Let's pull up my order screen. These are the trades I'm in right now. I don't have a lot of trades in. I just took a couple of trades, bigger lot sizes though. So it's as if I had, a plethora of trades here, but I've just got bigger positions on. And now in hindsight, I wish I took even bigger positions, but oh well. So we changed this week. We have 4 different pairs we can choose from. I took all 4, although with the Euro Franc, we're just waiting to be triggered into. We're taking a different style of entry with some of these. We're kind of waiting for the market to come in our favor before we just go ahead and jump into these. So I have a Euro Franc short ready to go, a couple of trades short ready to go in the event that the Euro Franc takes a dive. We think, based off the COT report, that the market will probably go down. It's not at the moment, and so we have not triggered into that trade. So we're just waiting on an empty trade, a position that could or may not be filled. Okay, so that's the Euro Franc right now. And then we also have the CAD Yen short, got a couple trades on that, and then I've got a CAD Franc short, couple trades on that, and the Euro Yen short, a couple of trades on that one as well. So this is, for example, this is the CAD Yen. This is what it looks like. It's been on this juggernaut run, very similar to the dollar run. In fact, these have almost been going together in unison. Just huge runs. We've got some really crazy things up. This is one of the most interesting times to be a Forex trader. I would say I'm even bigger than the pandemic. Like what we're witnessing right now in the world of Forex and money and money transfers right now, this is the golden age of all of that. The kind of the pandemic set the stage for it to happen, but now we are seeing the repercussions and kind of the just the consequences of everything that was done in full force right now. And we have other more short-term forces that in play. We've got interest rates rising. around the globe, especially here in the United States, we got interest rates going up, thus creating pressure on the dollar to strengthen, and which we've seen. It's done an incredible job. It's not going to last forever. I'm telling you, dollars can't do that. It is, if you think about it in terms of the next couple of months, couple of years, even, it's grossly overpriced, overvalued right now. The dollar is. So nonetheless, though, the banks got spooked. Their position. I mean, we saw that on the COT report. We'll talk about that in a little bit. But the banks, they left the dollar. I was surprised. Which is honestly interesting to see, because that means a lot of the banks took kind of a loss on the dollar. I don't think it was a total loss because, again, it wasn't the only position they were in. They had some other trades as well, but the dollar short was not a great trade. And I think it was going to be, but there was a couple of things that happened. Like we had Jerome Powell came out and doubled down on interest rates. He basically said, not only are we going to raise rates, but we're thinking about 6 more of them. Oh, and by the way, instead of 25 basis points, we're thinking about 50. So it was just like one, slap after another. And that was just the right fuel to create this juggernaut move type of thing on the dollar. Now, this isn't the dollar here, but this is what that looks like. In fact, if you pull up the dollar yen, I think it's down since then, but if you pull it up, we can go look at that move. Here it comes. Yeah, so this run from basically down here all the way up to here was over 1,000 pips. And that was because of all these statements, rate statements. We've got Jerome Powell coming out, pushing the narrative for higher rates via 50-point basis hikes, and the fact that there's 6 more of them, which is unprecedented. I will be honest with you guys, like how confident do you believe? I mean, I'm curious to know what you guys, do you really trust them? Do you believe that they're going to actually raise it 6 times? No, I think they have to say it. They almost have to come out and say, well, we have a fire hose on this inflation fire. We can't show it to you. I've got it. It's right behind my back. I can't tell you that I've got it, but I'm not going to, I'm going to tell you that I have it, but I'm not going to show it to you. Right. That's kind of how they're playing, what they're playing right now. And some people will believe them. So yeah, do I believe they're going to raise the rate 6 times? No, no way. Is that what they said? Yeah, that's what they said. And will they continue to raise it? Perhaps, maybe a little bit more, but I don't know how in the world you could raise it 6 times without decimating the economy. With the amount of debt that has to be serviced, you can't service the debt, you can't maintenance the debt when you have that much debt circulating at a higher interest rate. You can't take out more debt when it costs you that much more money to service it at that higher rate. It would just be an utter collapse. So no, they're not going to, unless they want to, unless that's the plan, I don't know. But I don't think they have the ability to flood the market with 6 interest rate hikes. And at that, the potential at 50 basis points, come on, I don't think you could potentially do something like that. In fact, I was talking to let me tell you another thing. I've been talking to a lot of people in the industry recently. You watch these mortgage rates go up, you watch these other interest rates just everywhere go up right now. What they're doing is they're trying to create a runway. We're coming in for an emergency landing on the economy, and we have to create a runway for the collapse. And so the only way we can create the runway is if we go up, right? So we have to go up to buy time so that when they have to bring them down truly, we can bring them down again and be like, oh, see, look, we have the ability to bring them down. But if we're already at 0, if we're at 0% interest, and then we have a collapse at 0, that's even worse. There's no runway. That's where you hit real big problems. So, is it impressive? I mean, is it a good thing? Raising rates is probably a good thing if you think about it, because going into a crash at 0% interest would be the worst. But I mean, we're pretty much there at 0% anyway in terms of the Fed funds rate. So I mean, they're raising it, but they have to create the runway so that when things do fall apart, they have space for that collapse to actually happen. So anyway, that's what's going on right now, and that's why the dollar's reacted so funny to this. That's what's happened here. We are, like I said, we are starting to see this kind of cool down. I imagine the dollar will probably just pill off from here. It'll probably just continue to lower, but this isn't going to be our focus because the COT report certainly doesn't indicate it. In fact, so speaking of that, let's turn our minds and move over to the COT report. So here's the new report for this week. You can see the dollar here. Look at this, at 80% short, still very short, but look, it went from 90% down to 80% short in 1 week. That's not good. So they added long positions this last week, and that's not a healthy thing for the trade, and so that concerned me. But what was really, really cool is you look at the CAD. They lost 24,000 contracts on the long side and added 5,000 contracts to the short side, and that's a huge differential, huge change. And so the Canadian dollar, some banks came in here and just decided it's time to short the CAD. Now, I will tell you this: one of the big dangers to shorting the CAD is what commodity is tied or pinned to the CAD? It's oil, right? So if we're shorting the CAD, in essence, that's another way of saying we're shorting oil. Now, so do you see? This is why we have to be cautious with these entries. Now, the thing is, oil actually, I don't know if you've been following it. When it's actually down from its highs. We were at like 125 a barrel, or back below 100 again, or something like that. So this, when you look at the CAD right here, let's pull it up, the CAD yen. When you look at this, this pulling back is, that's 200 pips alone, just that pullback from its high. That's partly because of the oil pullback. So we don't really know how much higher oil prices will go up from here, and maybe, and maybe, just maybe, I know everyone's really scared about it, but could it be that the market overreacted to oil prices? Maybe. I don't know. I'm just saying that the media seems to make a big deal out of it, but maybe, just maybe, we overreacted to that, and maybe prices will actually come down instead, or plateau. Even if they just plateaued, well, let me give you that. So let's say just oil prices stayed at $4. Where I live, it's $4.30 a gallon. I don't know. You guys put in the chat box what it is where you live. But yeah, it's like $4.30 around here, just regular unleaded. Even if just we plateaued at these prices, we have to compensate for everyone rushing to oil so fast. And so it makes sense for an oil pullback, even if we just stayed at these prices and we didn't really just continue on a juggernaut run like we've had. I think we've had a lot of stuff juggernaut recently. I've been using that word a lot because a lot of stuff has, and it's about time a lot of stuff kind of levels off or even pulls back from their highs. And I actually think that what I'm not trying to say, I'm not trying to say oil is about to go back down to pre-Biden era lows. I'm not saying that. What I am saying is everyone rushed to oil so quickly because they were so worried about what was going on. Turns out things, well, I'm not saying it's good over there, but I am saying that it's not World War III. Okay. So everyone reacted like it was World War III, but it's not turning out that way. So even if prices stayed the same, we're due for a pullback. That's all I'm saying. Okay. So I don't want you guys to think like, oh, Steve's bearish on oil. No, I'm just saying there's room for a pullback. That's it. So let's see. Anyway, so let's see. Next thing. Okay, another thing that we want to do moving forward here as we look at so this week, another thing that we're changing, I wanted to change up how we enter into I wanted to change up how we enter into these trades, because last week, you know, we kind of chased the dollar up. We chased the dollar up, and so we got into that trade kind of prematurely. I don't want to do the same thing with a lot of these new trades, because we have had a lot of these things run up, had juggernaut moves. And so when we enter into, say, like the CAD here, I'm playing this really differently. So when you guys look at this trade, so for example, we're shorting the CAD yen right now. Okay, so with this trade that we're shorting the CAD yen, what I'm doing here is I'm putting my stop losses at the previous pivot high if we get a move. And so I'm being really conservative with this. If this thing decides, nope, we're not pulling back, this is just a dip, and this thing wants to go back up to here, I'm just going to take the loss and reset the sell stop. So as long as the banks continue to short in terms of the COT report, we're going to go ahead and continue to short, but I'm going to change this up so that, you know, we sell after it breaks these lows, if that makes sense. So and I've done that with pretty much everything else here. So if you pull, let's pull up like the CAD franc. Like, so I've got my stops here above these highs. And if it does decide, oops, no, we're not done, we're going to do another high, I'm just going to cut it early. And then what we'll do is we'll look for those previous pivot lows. So if this becomes the new pivot low, we'll go ahead and put that there. The other thing I was thinking about doing is if you just pull up a Fibonacci retracement, I've been just putting our entry about midway between the 0 and the 23, or just at the 23. So one of those two options is fine too for the entry. But again, the concept here is we're not trying to chase the market as it goes up, because we don't want to get caught in the drawdown. We're only going to feed into the trade as long as the market is willing to go in our favor. And again, we're only taking trades based off of what the COT reports actually say, giving us, right? Let's see here. Let me read some of these comments here, Daniel. Oh, you were talking about that earlier. Let's see here. Is there a negative number on the long or short change you would consider that a positive number for the other side? Like if you had a negative short change, would you think of it as a long in the market price? Oh yeah, that's a great question. I haven't given too much thought into that. Shoot me an email, Glenn, and let's chat over that over email, because that, I see what you're saying, but yeah, let's definitely talk about that over email. But I just, like I said, I haven't given too much thought into it. So yeah, definitely shoot me an email. Wow, 480 in Phoenix thing. That's a lot. 399 in Maryland. Yeah, 429 in Virginia. That's about the same here in Utah. So Saivam, I'm not necessarily increasing my position size. What we're doing is we're saying, hey, if the market goes into my favor, like, yeah, if the market goes in our favor, then we'll go ahead and enter into the trade. So what we were doing before is with the dollar, we were shorting the, let me go back to it. the dollar yen over here. Let me just run back to it. So what we were doing before is we were starting to sell, you know, back in here, we'd short and we'd short, we'd short all the way up, right? And then we just get caught, you know, with a huge drawdown, you know, almost unbearable. So what we're doing now is we're saying, okay, hey, you know what? We still want to short this. The banks are selling this, well, not this one necessarily now. We're using some alternatives like the CAD yen, CAD franc, euro yen, euro franc. Those are ones we're shorting. What we're doing instead is we're saying, hey, if it breaks this previous pivot low or this previous pivot low, then we'll go ahead and take the trade. But if it just wants to keep on going, we'll just let it keep on going. But we're not going to chase it up. That's what I mean by chasing it. I think I saw somebody ask the question, you know, what does it mean to do that? That's what I mean. We're not trying to chase the market up anymore as it's rising. Okay, we're waiting for it to pull back. Once it pulls back, you know, then we'll go ahead and enter into the trade. With these ones, like, you know, with the CAD yen, we've already seen some pullbacks. So we have this, you know, this already pulled back a little bit. This is the most significant pullback that we've had since the beginning of this rally, right? So it makes sense now to go ahead and start. But if this thing is not done, you know, if it wants to go back up, then by all means, let's get out, wait for it to reset again, then we'll go. Okay, that's what I'm seeing. I hope that makes sense. I hope that makes sense what we're doing. There's two things that's going to happen here that's going to help us with our setups going forward. One, we're not going to have a huge drawdown. You can't have a huge drawdown doing this. Two, you're going to have a bigger lot size naturally because your stop loss is tighter. You can afford to have a bigger contract size because the risk is lower. Also, because your contract size is bigger, you now have the ability to have a bigger take profit. And so that's what we're trying to aim for here. Like, look at these. These are just micro lot or mini lots, excuse me. These are mini lots, and I've got 6 of them executed right now. All of these targets I have down here at these previous pivot lows, kind of close to where these big moves started. You know, if this thing gets to its target, that's 679 pips. So each one of these should make between $600 and $700. You know, on the CAD yen. You know, if you go to, say, the CAD, what is it, CAD franc, we'll pull that one up. The targets I have on those that I'm looking for down here, again, just right in this, you can see all of this kind of support area. That's where we're targeting. And that one, I guess that one's only 162 pips. But you know, that's still 162 pips per trade, which on a mini lot's only 162 bucks, but hey, we'll take it. On the euro yen, I think it's a little bit more. Let me pull that one up. That's another one we're already in right now too. Just like I said, we've had some pretty good pullbacks recently. This one hasn't done much yet, but it's starting to pull back. If it gets down to kind of these targets down here, same thing, you know, 678 pips. So yeah, between $600 and $700 is what we're hoping to make per trade on this pair, right? If you're trading a mini contract. But yeah, again, if this thing decides, hey, we're not done, it just wants to go back up, then yeah, I'm going to take this loss. We'll book that loss out. And then immediately I want to come back in and I want to reset. I want to place, you know, we'll look, I'll probably pull up the Fibonacci and say, okay, where's midway between 0 and 23? You know, right there, that's pretty much where we got in. Or I'll try to match it up with the previous pivot low if I can. You know, if it breaks that pivot low, breaks that structure, then we'll go ahead and start selling again with a tighter stop loss. But yeah, I think that's important just because it's going to stop. We've just had a lot of these trades where, you know, they're awesome trades. You know, a lot of these will wind up making hundreds or even thousands of pips if we're patient enough. The problem is that the drawdowns can be really big on these, and it's affected you guys, it's affected me. And so I'm having to come up with a more unique way to trade this. And I think this matches kind of the strategy a little bit better. Because yeah, all of these are most likely going to be fantastic, phenomenal trades. Even the dollar yen, I know the banks have kind of left it a little bit this last week. I know they've kind of, I know the banks have kind of exited this position largely, but I imagine it's still probably going to fall off the cliff still. You could probably still trade this one. I'm just going to focus on the other ones that I've already posted. But this one will probably do the same thing. But you could trade this the same way. Hey, let's just, if I want to sell now, go ahead. If it breaks the previous pivot high, either here, or you could even use that high right there, that's fine. Put your stop there. If it for some reason got back up there, then go ahead and stop out, take the loss, and then immediately reset in the event that the market were to drop again. So let's see. Brian says, do you still use the SSI in your trading? Not as much anymore. I probably should have, because I bet you that a lot of people were selling the dollar yen on the way up, and we were doing that too, and that's probably not good. I bet you now, and you could probably tell me if you're still using it, but I just imagine based off of this move down, a lot of people have shifted to buy. So a lot of retail traders are probably buying the dollar now, dollar yen, thinking, hey, this is just a dip. It's probably not going to turn into a dip. I think you and I know better. It's probably going to be a dump, not a dip. So, but yeah, again, this is basically the same thing, because we're already trading the yen short, and the CAD has got a lot of similarities. And again, I'd rather be in the right direction of what the banks are doing. The CAD yen is going to probably do the same thing as the dollar yen. So my guess is this one's also going to take the dip just as hard. So you can't go amiss. You almost just pick your one that you want and go for it. I will say this though, if you have not already taken this trade, do it, because you're probably running out of time you're going to run out of room, because some of the best prices available have come and gone, and they will go. There's still good time. I think this is still a good time to sell. This is going to start coming down a lot more, I believe. And so I want you guys to be in this if you want to. So Sevam said earlier, the reason I ask, I noticed you do not have as many open positions. Yeah, this time, part of the reason why I did that is this time I'm not trying to dollar cost average like I was before. This time okay, let me explain it this way. There's two types of traders. You have like the sniper, and you have, so we'll relate it to guns, right? You have somebody who's more of a sniper, and then you have like the machine gun guy. What we were doing was more of a machine gun approach. We would say, okay, hey, the dollar yen is going up, machine gun, we're just throwing trades, trade after trade after trade after trade on the way up, and hoping for it to come down. And we would just kind of dollar cost average. The sniper, he's trying to be a lot more precise and accurate with his trade. So, if you're a machine gun, you can miss your target plenty of times, and still, as long as a few hit, you're good, right? With the sniper, he doesn't have the luxury of trading as many trades, right? So he has to hit his target. He has to be very accurate and pretty much just ensure that is going to be the trade. Or if he misses the very next trade, he's getting the win that he's been wanting, right? That's what we're trying to do now. So we're kind of converting to more of a sniper approach. And so thus, because we're snipers, we can take bigger trades, but fewer trades. Okay. That's kind of what we're going for here on this. We're trying to make hopefully between 600 and 700 pips on this trade. And so, just think about, okay, what lot size do I need to make what I want to make with 600 or 700 pips, right? Let's see, any questions about this? It looks like it's already starting to work. You can watch it. It's already dumping on us right now. Just while I was sitting here, we were at 3% positive I'm at 3% positive for the day, and now I'm up to 3.5%. Here you can see down here, almost 3.5% positive. So yeah, it's already starting, and I'm pretty excited about it. I mean, it's about time. We had a rough couple of weeks. Now things are starting to work in our favor again. So, all right. Yeah, any questions about this today, guys? Yeah, as long as you're in, if this is my order screen again, these are the trades I have open. If your screen looks similar to that, you can take more trades. You can take just one big trade. That's fine. I just elected to take just a couple of trades on each one just to keep track of everything. It's hard to manage a lot of trades, especially when we're just trying to snipe this, if that makes sense. It's as if I still have the same lot size, because I was trading 3 micro lots before. Now I'm trading 0.1. So I've more than tripled the lot size, and just taking fewer trades, but bigger. So Marco says, are you still using the 1 hour chart for entries and the 4 hour chart for the new way you are entering? Yeah, so it's still the 1 hour. Yep, 1 hour. And then what I'm doing is for the entry, you just pull up a Fibonacci retracement, and I'm trying to put most of the entries about midway through the 0 and the 23. For me, that's a significant pullback if it's on a move like this, or just putting it at the most recent pivot low, I think is also an okay thing to do. And then, yeah, we're trying to go for 5 to 1, 6 to 1 type of rewards. I mean, look at the stop loss on this thing. This is 128 pips, but the target is 690, right? So yeah, we're looking for 5 to 1 on that type of a trade, almost 6 to 1. All right, guys. Okay, well, I'm going to leave it like that. And then you guys are more than welcome to text or email me throughout the week. We'll have our next class on Thursday and just kind of check up on these 4 trades that we've set up here. So anyway, guys, appreciate your attendance tonight. Thanks for coming, and we'll see you on Thursday.